But Nifty in last couple of days, maybe range bound, boring, going up and down. But when will we see a decisive trend? Nooresh, good morning. Are we in for a decisive trend this series, next 10 days?
Good morning. So I would not be in that expectation of say a move towards 18,800. That would imply a fresh trend till the time we don't get out of that debt ceiling issue in the US, and that continues to be a problem. We've seen that volatility over the years every time, but it gets done. So that's the case wherein 18,800 could be difficult over the next 10 session. But stock specific trend still continues to be positive. Over the last few sessions, we've seen a lot of global parameters take a dip, whether it is a uptick in DXY, whether it is a downtick in US markets, whether it is a downtick in some of the European markets. But we've not seen a similar correction here. That indicates there is relative strength, but there is a waiting period which is left for some more clarity globally. And once that happens, we'll see a bigger move. What is interesting is the breadth is still good. The Nifty Mid Cap 100 actually hit a new all-time high. So clearly, the place to be right now is to look at stock specific rather to look at the index as much. Till the time we are above 18,000, 18,050, the trend is positive. Be positive on the index. Look out for buying on dips.
Buying on dip strategy is what Nooresh is advocating. And as we step into the new series, Kunal, what's your outlook for the month of June? Do you also believe that as long as these debt ceiling negotiations continue, we're in for a bit of range bound trade?
Yeah, I think we've already gone through that range bound for the last 10 days.
But I believe
continue. No, my sense is that we should break out now this time around because we've gone through a time-wise correction. We've gone through a patch of churn of sectors where the move initially started off from high beta spaces. Now it's moving to the defensive. So that churn is also sort of completed. That one first phase of a churn is completed, and I think now the market should be ready for a breakout. Now the only concern, as I highlighted, start of the week, was that the dollar index is rising up higher. That could probably act as a impediment to the current market rally or the pace of the current market rally. But I think the sooner we break past about the 18,400 mark, the quicker the momentum could probably get back into. Now the data in terms of the long rollovers was also very interesting for the indices. For the June series, there was a good amount of long rollovers seen for many of the individual large cap name stocks, and reduction of short rollovers for many of the beaten down sectors. So I think that also adds to the positivity for the markets overall. So would be expecting that pretty soon, hopefully by the start of the next week, we should be getting up for a breakout.